Hi, everyone, and welcome to Stock Market Today. It's Alyssa Corum and Ed Carson here. And on today's show, we're going to be taking a look at three stocks with notable action, starting off with Livongo Health, as well as Amazon and Nvidia. But before we do that, let's take a look at the major indexes. And today, we're actually going to be taking a look at Invesco QQQ, the ETF that tracks the NASDAQ 100, because across the board for the major indexes, Ed, we saw a sell-off into the closing in negative territory with losses for the day after pretty substantial gains earlier in the session. What do you make of today's action?
Yeah, it wasn't great action. Was leading the action were some of the beaten down stocks like the airlines and the oil stocks. Oil prices reversed sharply lower. U.S. crude fell 9.4%, I think. It was really negative. It's not good to see it. The Qs, which had been doing better than others, it actually got above its 200-day line. Well, that didn't hold. A lot of breakouts struggled. We saw a lot of really positive action to start. Didn't come down. You have to take it day by day. This is still a very volatile stock market rally. Yesterday's action was very positive. Today's day doesn't erase that. Obviously, most of the gains are essentially there from yesterday, but it's just a notice that you should be careful, especially right at the open. That just because something looks promising, you should still be. If you're going to be aggressive, be cautiously aggressive. Definitely with caution involved.
That's right. And whether it's the major indexes or an ETF like this, it just goes to show you that looking at those moving averages or psychological round numbers, also very important. And you can clearly see resistance here at the 200-day line for the NASDAQ 100 tracking ETF.
Yeah.
All right, and moving on, let's take a look at Livongo Health, LVGO, the ticker there. That was our stock of the day today, Ed. Now, this was definitely a bright spot in the session, and we saw a gain of over 10% today, a breakout for this relatively recent new issue.
Yeah, and you can see they had pre-announced before the open, and that's really strong. I would say just before going on is that sometimes stocks have good news on earnings, even and then the next day they may fade off, especially in a weak market. It's a choppy market right now, so we'll see. This is a digital health company, so remote tracking and monitoring, some telemedicine. These are all things that you might imagine might be useful in the coming months and well beyond the coronavirus crisis. One thing is actually if you went to a 5-minute bar, if you could click onto that,
Yes.
this is a situation. There were some breakouts today, and we'll get to some of that later, where they started off strong and then immediately reversed. Well, this one you can see it started off okay, gapped up, but then it continued to strengthen. And so if you had waited 30 minutes or 60 minutes, yeah, you might have paid an extra 50 cents or so, but you had then a little bit more confidence that it would hold, and it did hold. So there's one reason why you can be cautious by just waiting. It's sort of like, you're waiting for a coronavirus test. Here's a coronavirus stock market test you can do to be a little bit more certain in how things are going to go.
Yeah, that's right. That's such a good point. We love, of course, looking at our weekly charts, taking a step back, looking at the trends, and monthlies too, dailies, kind of refining those buy points, and then even more so refining them on those intraday charts. It's a very, very helpful tool. And now let's flip on over and take a look at Amazon today, because we did see it fade a little bit. It closed up with a gain of 0.7%, but it cleared that 2,000 psychological level, which was nice to see.
Yeah, it's nice to see, and it didn't reverse lower. It actually held some gains because the big techs really didn't move too much, period. So, this was pretty nice. Yesterday I got above its March 31st highs and its 50-day line, getting above this 2,000 level. You could still say it's actionable from getting above the March 31st level. It still has the buy point at 218,605, but this would be an aggressive entry or a place where you could start a position if you wanted to. Obviously, a coronavirus play. It was doing well before the coronavirus crisis. It's a big name. It's probably not going to tank on you, though. Obviously, you saw on the crash, it still tanked. But it's likely to hold up better than maybe some of the smaller names.
Yeah, that's right. And Ed, you mentioned stocks reversing lower today, and that's exactly what we saw for Nvidia. It closed down 3.5% after trying to break out over a cup with handle base. Yet again, going back to that point from earlier about looking at those intraday charts is helpful here.
Yeah, and we're not talking about day trading. It's just sometimes that early on actions, everybody's excited. Oh, the futures are up. We're all buying and buying. And then it's like, well, after that initial burst of buying, then what happens? I mean, this one fell off almost immediately. I mean, after like a minute or two, it hit the high of the day and it never. So if you waited here, you say, well, wait a second, maybe I won't buy this after all. I mean, now it's a situation because it was looking great. It had a cup, it had a handle, it was looking really nice. The relative strength line has been holding up very well. So there was a lot of reasons to like it, but in this kind of environment, you're just better off taking a moment, taking that extra time to say, well, wait a second, is this really working before committing, real serious dollars.
That's right. And just to recap what Ed is saying here, when you're looking at those intraday charts, you want to make sure at the very least that that first 5 minute bar looks strong. And then we also like to see if it can actually take out its first hour high to really help you see if the strength that puts the odds in your favor to see if the strength can hold up instead of, like you said, falling off relatively immediately.
Sometimes a stock will run away from you. I mean, that'll happen, but you'd rather have that happen every once in a while than to have a stock reverse and all of a sudden you're stuck almost immediately with a pretty sizable loss because you couldn't, didn't wait a few minutes. So that's where the trade-off is.
Yes, that's exactly right. And for more in-depth tips here and nitty-gritty chart action, helping you find those right buy points, make sure you tune into IBD Live every morning, where now that we are in a confirmed uptrend, we are talking about stocks that are actionable or setting up. So you really want to make sure you're tuning in so that way you can get a better sense of what's really out there in terms of top stocks to buy and watch, right, Ed?
That's exactly right.
All right, everyone. Thanks so much for tuning in today, and we'll see you right back here tomorrow.